Well, meantime, China is continuing to pull various economic levers in response to Donald Trump's reciprocal tariffs on Chinese goods. Beijing is now reportedly ordering its local carriers to pause all incoming deliveries of American-made Boeing aircraft in deals worth billions of dollars. Taimur Baig is the chief economist and managing director of Singapore's DBS Bank. He says Beijing's latest move is putting added stress on the aircraft manufacturer.
I think that there is a nuanced approach to dealing with provocations, and there are blunt ways of doing it. I guess this is one of the blunt ways of doing it. Look, at the end of the day, to me at least, analytically speaking, leverage on trade war is not about the one who runs deficit or the one who runs surplus. It's about the one who has greater degree of substitutability of the trade in question. So, for example, if China wants to buy alternatives to its U.S. imports as far as soybean or animal feed or liquid petroleum gas is concerned, there are others in the world readily in Latin America, in the Middle East to provide that. On airline, it is a bit of a blunt tool. It's not that sophisticated because there isn't a lot of substitutability. It's not like Airbus is out there with a huge excess supply of mid-range jets that Chinese airlines, which have already committed to Boeing, can do it. So I don't think this is that seismic. At the end of the day, the Boeings that are in China would have to keep flying. They would need parts. And the new Boeings that are coming in as part of the long-term plan would have to be there. But it does create a near-term earnings uncertainty for Boeing. And I'm sure the Boeing executives, who are already been under quite a bit of pressure in the last few years, it hasn't been a very good run for that company, would be additionally stressed by this.
Yes, and do you think in the more long-term, manufacturers, namely Airbus, like you mentioned, might be rubbing their hands with glee?
I think the likes of Airbus also have some degree of rigidity on their production processes. Unless the world were to bifurcate on a permanent basis and somehow or the other the world says we're not going to buy Boeing, I really don't think that's on the table. But if that were the case, then you would not only have Airbus maybe rubbing their hands, you would have Comac from China becoming a meaningful player. That, by the way, is the story for the next 10, 15 years. In the mid-range airlines in particular, with Airbus and Boeing really cornering the market, maybe Brazil's Embraer to some extent, Comac will become a consequential player. So in the very near term, I think there is a rigidity of demand, trade salvos notwithstanding. In the medium term, the supply side may be subject to significant transformation because China will become a meaningful player itself in the next decade.
Yes, and now we are seeing Hong Kong putting a stop to postal services for US-bound goods by the end of the month. Now, Hong Kong is a financial hub, not exactly a manufacturing powerhouse like its mainland, but how impactful might this be for the US?
So it seems to me it's, again, part of a larger noise. I mean, how substantive it is remains to be seen. When we talk about goods from Shein or Temu, who have been taking advantage of the $800 sub de minimis rule, under which packages below $800 worth would not be subject to any sort of customs tariff in the U.S. That being taken away is what's bringing this entire debate to question. So I think initially when this was announced, I think a month ago, it seems like a longer than that, we had a temporary pause in shipment, and now we're back to that. I think this, again, is problematic for American importers of low-end manufactured goods from the mass retailers of China. But, some of the cost advantages in these areas are so seismic that even if you add the 100% tariff or whatever the actual minimum value is on top of it, I think some of these products remain competitive in the U.S. nonetheless. So whether this is being done to sort of hit the shelves of the United States, where there will be actual genuine shortages of these products, or that the cost proposition is such that it can't be done, remains to be seen. I think it's more the former than the latter, because I think even under 110, 120% tariff, a $10 pair of sunglasses costing $20 still is a pretty big bargain in the US.
Let's look at the tech side of things, Taimur. A chipmaker NVIDIA says it will have to take a $5.5 billion hit because the US is restricting exports to China. Now, who's the bigger loser here in the context of the AI race between the two economic giants?
In this one, the answer is straightforward. Everybody loses. I don't think there are any winners in this. The US has been trying to corner China for almost a decade now. Remember the big Huawei ban, stretching almost back a decade, to all the things that has happened in between with export controls and outright bans on certain technology and product access. I think as much as we're looking at the charts that NVIDIA is taking, we also have to consider the fact that ASML, which is the company that is uniquely positioned in the production of high-end lithography machines, they're also giving very poor earnings guidance. So clearly, there is a huge market for these products in China, and now cutting that off hurts China without any question. This is not good news for China, but it also hurts a lot of companies which get a substantial amount of their earnings from China. Both lose-lose. It will, of course, slow China down because I don't think China has any sort of capacity to produce extremely tiny chips right now. They're making progress, pretty impressive progress, but still far away. So this certainly hurts China in its aspiration to become an AI superpower or any other form of cutting-edge computer technology. But at the same time, it really hurts truly globalized large companies which have made billions and billions of dollars in earnings every year from China. They'll be losing out on that.
Now, looking, of course, from what we've heard today about the postal services and aviation, it begs the question of what other levers are there that China can pull should things escalate?
If we see tomorrow a very large order going from China to Brazil or to the Middle East, in the case of Brazil for agriculture products, to the Middle East for liquid petroleum gas, I think that's a big signal that some of the imports that China traditionally does from the US is not going to be there anymore because, as I said earlier, there are readily substitutable products out there elsewhere in the world. So that could be one. And at the same time, that issue related to exports of sub-$800 products being sort of seized, if that start manifesting into empty shelves or major order shortages in the US, particularly with respect to US small businesses, which rely a huge amount on China's supply chain, that could be another lever, if you will, because that sort of hurts the pocketbook of everyday Americans. And that pain becomes manifest very, very readily.
And on China more broadly, it's just reported its economy grew by 5.4% in the first quarter of this year, very much on point with Beijing's overall target. But this was pre-tariff war. Will that figure significantly fall when it reports the next quarter?
I think both for the United States and China, we're going to see rather anomalous distorted GDP data for the first half of 2025. In the case of the US, we will see lopsided imports because importers tried to get ahead of these tariffs by doing bulk orders of the imports, and we will see lopsided exports coming out of China, particularly in the first 3 or 4 months of this year. So whatever we see in the case of China in terms of upside surprise, and whatever we see in the case of the US in terms of downward surprise, both would be probably devoid of the overall year's dynamic. China may not be that great, US may not be that bad, but these are early days. We got to see how permanent some of these tariffs are, whether there'll be some degree of scaling back after negotiations. And if that were the case, we might see some quote-unquote normalization of trade and GDP dynamic. But we are living through rather rare moments where the numbers that we see actually may not bear too much meaning to us.
Okay, Taimur Baig, I really appreciate your insights and analysis today. Thank you so much.
Thanks very much.